Hi, I'm Veronica Van Wollen, and I'm joined today with Tim Warman. Tim is the CEO of Fiore Gold, and we're excited to talk to Tim today about all the opportunity for Fiore. I know I'm really excited. Tim, how are you doing today?
Oh, great.
Good to have you here. So for anyone who doesn't know about Fiore Gold, I want to start with a little bit of a summary. When I see your story, a few things stick out. Number one, you're really a turnaround story, right? In 2016, you purchased assets for $5 million. You turned the company around. Last year, you had $8 million in cash flow from one of your assets. You're very cashed up, $34 million of working capital right now. You're in Nevada, a great jurisdiction. And not only that, but I almost see this as an opportunity for investors to get involved in a company where there's production, development, and exploration. So I want to talk about all of that for investors and get them excited about this story and talk about the opportunity for 2021. Before doing that, for anyone who's new to Fiore Gold, why don't you start with a quick introduction?
Yeah, thanks. So, we, as you said, picked up these assets out of a bankruptcy transaction. 3 assets, 2 in Nevada, 1 in Washington State. We turned the operating mine around. In 2017, we got it up and running full speed. As you say, it just generates cash flow. In fact, that $8 million was a quarterly cash flow. We generated about $24 million in operating cash flow out of that one asset last year. When compared for an asset that you paid $5 million for it and 2 others rather, it was a pretty good deal. We've got a development project right next door in Nevada that we're working to get into production and double our production in Nevada. And then a kind of interesting asset in Washington State that we think is overlooked and would make a really good spin out.
Yeah, that's right. I think we should unpack that for investors because you do have 3 assets, right? You have the producer, Pan Mine. You have the development, which is a Gold Rock. And then lastly, you have the Explorer, Golden Eagle, up in the Washington State. Let's first focus on Pan and kind of give investors the summary for 2020 and what they can kind of expect leading into this year.
Yeah, so 2020 was a great year. It was our best year yet. I think we've, Pan, just for people who aren't familiar with it, it's a smallish open pit heap leach gold mine in Nevada, very typical of the kind of mines you see all over Nevada. Last year we did about 46,000 ounces of gold. The year before we had done about 41,000. So we saw a nice increase over the 3 years in our gold production. It's generates great cash flow, particularly at these current gold prices. And this year we'll have production in a similar range. I think we guided 44 to 47,000 ounces. We just put out our first quarter today. We were a little lighter, but we were light in the first quarter last year. And we still think we'll hit our guidance for this year. And Pan is kind of at that steady state. It's just a nice cash generating asset that really fuels the growth of the company without having to constantly go back to the market to raise funds or just take on debt.
Yeah, I think you raise an important point, right, for investors. Because this is your cash generating asset, you don't need to raise equity. And correct me if I'm wrong, but you haven't raised since 2017. Yeah,
that's right. September 2017 was the last time we raised equity. And, there's not many small, companies of our size that can say that. We think we've been very gentle with our shareholders and tried not to dilute them unnecessarily. And on top of that, like I said, we haven't taken on any debt either.
Mm-hmm. So. Talk to us actually a little bit about the cap table. How many shares are outstanding right now?
Yeah, it's a really simple cap table. 98 million shares outstanding. There's no warrants. There's about 7 odd million RSUs and options. And management owns about 5% with directors. And there's a couple of a small fund out of New York owns about 5%. Kinross Gold owns about 5%. And the rest is really broadly held. We don't have a kind of large dominant shareholder in the company.
So it seems like retail investors are really liking your story.
Yeah.
Okay. Let's transition now to Gold Rock. So Gold Rock is your second asset. It's also located in Nevada, and this one has more of the development potential. What is the opportunity with Gold Rock?
Yeah, so Pan is doing just under 50,000 ounces a year. Once we get Gold Rock into production, and that'll be sometime in sort of late 23, early 2024, that'll more than double our production. That'll get us up over 100,000 ounces in Nevada. And, these 2 projects are really close together. They're only 8 miles apart, about 12 kilometers. You can actually see Gold Rock from the high wall of the Pan pit. And Gold Rock is really more of an expansion project or a satellite project to Pan. It'll use a lot of the same infrastructure. It'll use the same operating team, the same contractor, a lot of the same facilities. and the great thing about it is it's permitted at the federal level in any case. And that puts us years ahead of any other project that's either hasn't gone into or is still in the permitting phase. Gold Rock took almost 8 years to permit. Wow. And that's not unusual in the US. It's actually probably not unusual anywhere. So that lets us push it ahead at our, at a speed of our choosing. And so we did a PEA last year. We're into a full feasibility study right now. Mm-hmm. We're aiming to have that done towards the end of this year. And then we'll make a construction decision and go straight into design and construction.
So this, to put some dates around here for investors to understand, fully permitted at the federal level. You'd anticipate this to go into production probably in 2 years or so. Is that what you're? Yeah,
we'd be looking to try and finish construction and start stacking ore on the leach pad towards the end of 2023.
Okay.
And then, really starting to ramp up gold production through the end of 2023 and into 2024. So 2024 would probably be what you'd consider the first full year of gold production out of that.
What would be the cost investment required to get this to production?
Yeah, it's not a terribly high capex company. Under the PEA scenario, you come in at about 65 million US, and there's lots of rooms we think to improve on that. And given that the company has a market cap well north of 100 million US, I think it's a pretty modest. And we'll fund that through a mix of our own resources and probably a typical debt equity type of mix. There's right. Lots of people out there willing to provide debt for it because it's really an expansion of an existing mine as opposed to a greenfields project.
Yeah, it seems like a very easy kind of path to production here. And just to reemphasize that, right now you're producing approximately 50,000 ounces at the Pan mine. With this one being in production, you'd expect that to about triple to quadruple to 150 to 200,000 in total. Did we get those numbers right?
Well, Gold Rock alone will bring in about another 55 to 60,000 ounces. So that'll get us just over 100,000 ounces. And really to grow into that 150 to 200,000 ounce range, that's where we're going to have to do some M&A. And we've been looking for similar projects, open pit, heap leach type operations, ideally in the US, maybe in Canada, to bring on board to kind of, continue to grow the company. Because we think that 150 to 250,000 ounce production profile is a pretty sweet spot.
Okay, got it. So actively looking for new assets to acquire into the company. All right, let's kind of switch gears here and talk about Golden Eagle. So this is your exploratory asset. It's not in Nevada. It's in the West as well, in Washington State. And I've heard, chitter and chatter of about a spin out, potential joint venture, maybe even doing an agreement with a major like Hecla. What is Golden Eagle? Tell us about Golden Eagle and what the opportunity is here. Golden
Eagle's it's a kind of unique project, and it looks a lot like some of these other large projects in the Northwest US, like Integra's Florida and DeLamar project, or Revival's Arnett project. It's about 2 million ounces. It's measured and indicated, so it's nice solid ounces. It's open pittable. It's just outside the town of Republic, Washington, in northeastern Washington State. It's actually just south of the Canadian border. It's an old historical mining district. They've been mining there since the 1800s. There's a couple of mines that Kinross owns quite nearby, Buckhorn and Kettle River, that are just on care and maintenance right now. Hecla has a large land package in the area. And the biggest issue for us with Golden Eagle and trying to push that into production is that it sits on a fairly small land package. And so we would need access to some of the ground on either side of us in order to put in an open pit and push the edges of the pit back, very much like Orla mining down in Mexico. And so we've been talking to our neighbors who are Hecla about either doing a layback agreement that allows us to mine into their ground, or what we think is a better option actually is to merge the projects with theirs and spin them out. Because right now Golden Eagle's getting zero value in our company. And if you were to spin that out, a 2 million ounce undeveloped gold project in the United States, those are typically getting valuations in the range of 200-300 million Canadian dollars. So, bigger market caps than what Fiore is now, but this is a kind of overlooked third project. So we think it's a neat idea. It's a bit slow, the negotiations with our neighbors. Fortunately, it costs us $10,000 a year to hold this project. So there's no panic.
So yeah, it's not expensive to hold it. Out of those kind of options, joint venture, doing some with Hecla, would anything realistically happen in 2021?
Yeah, it's a good question. It's somewhat up to our partners in the discussion. So whether we can bring Hecla to the table is an open question. We've been trying for the last year and a half. I think I'm confident that we can get something moving on it this year, but we'll wait and see.
Okay. So, you have a significant amount of cash, obviously. What is the plan for deploying the cash in the company this year across those three assets or beyond?
Yeah, I think, at Golden Eagle, we probably won't spend a lot this year, mainly because we want to see if we can get that agreement in place first. That's the first step, and that's our focus. In terms of Pan, we're doing a leach pad expansion there because we just recently updated the resources and the reserves and added another couple of years to the mine life. So now we need to build leach pad capacity for that. That's actually underway right now and has been for several months. And then really pushing ahead on the feasibility at Gold Rock. We've got about 100,000 feet of exploration drilling that we're doing. We've got about another 98,000 feet of geotech and metallurgical and condemnation drilling that's being done, and all the engineering studies and everything else. So, those are the big capital expenditures right now is expanding Pan, to handle the extended mine life and really pushing Gold Rock towards production.
Okay. So it sounds like there's going to be a lot of activity for 2021. Let's talk a little bit about what investors can expect in terms of news flow and catalysts for the year ahead.
Yeah. So, of course, at Pan, given it's an operating mine, we'll see quarterly updates, with our production and everything else. But there's also going to be a lot of drilling. As I said, we're doing about 100,000 feet of drilling over at Gold Rock. So we'll have drill results coming out throughout the year. We'll be doing quite a major drill program at Pan to continue to test some of these more regional targets there. Pan is as much an exploration play as it is a production play because there's about, 20 kilometers of strike length with targets that have been defined by, gold and soils and geochem anomalies and structure and alteration that have never been drilled. So we want to get out and drill some of those this year. So lots of news from the drill bit. And then really the kind of more routine met results and all the rest of those things coming out of the feasibility. Not that sexy, but still necessary to push that project forward.
Right, for sure. And I know when you and I had spoken, you mentioned that you feel that Fiore is quite undervalued compared to its peers. What makes you say that? Why do you feel it's undervalued?
Yeah, I think if you look at almost any metric, if you look at the dollar per production ounce, market cap dollar per production ounce, or per resources or reserves, or per EPS, or cash flow per share, any of those things, we're still kind of trailing behind a lot of our smaller developer and smaller producer peers, and quite frankly, a lot of those guys are operating in some pretty sketchy places, Papua New Guinea or Nicaragua or Mexico, whereas Nevada I think is about as good a jurisdiction as you can get. And I think that's starting to change. I think as we grow the company and continue to demonstrate, an effective operations team and hopefully get some progress on Gold Rock and also bring up the, some M&A into the company, I think that'll really help change the scene.
Right. Okay. I know you said a lot of technical words there, so I just want to kind of simplify that a little bit for maybe investors who don't know all this jargon that we're talking about. Yeah. Basically, what you're saying, if I understand correctly, is undervalued compared to your peers. Yep. If we look at our peers in the area, they don't operate in such sound jurisdictions as Nevada. Plus, you guys do offer this three kind of tier approach, right, where you have production, development, and exploration. Did I miss anything in that summary that you want to kind of highlight as well?
No, that's that's very good, and I think one of the key things is we've been a really disciplined company. We've got cash flow, we generate cash, we don't have debt, we don't go back to the market constantly to raise equity. So it's you don't have any of these nasty surprises that you get sometimes with these other companies. Yeah,
and I think for investors, it's important for them to remember that because there's no dilution, right? Yeah. If you get involved in Fiore now, you're not going to risk crazy dilution, of course, in this year because you are self-funding essentially, right? And that's important for investors to know. Okay. You clearly have a lot going on for Fiore, right? What are the kind of main takeaways that you want investors to know about your story when they're looking for a gold play? Why should they pick you guys, and what really stands out for Fiore?
Yeah, I think it's a couple of things. One is that it's a solid operating team that's generating cash, and I think we can take that operating philosophy and practices and apply those as we grow. I think it's a company with a lot of internal growth built into it. We're more than double production in a couple of years with a permitted project. So there's a kind of defined timeline there. We're not waiting on permits or anything like that. Safe jurisdiction. So there's very low political risk. I think there's not much more you could ask for. We've got exploration upside, and then we've got this nice big potential spin out sitting up in Washington with 2 million ounces on the books with lots of potential to add value there.
It almost seems too good to be true. No skeletons in the closet?
Not that I know of.
Very clean slate here. Very, very easy story to understand. I think investors are going to appreciate that. What I want to talk to you a little bit about is your sentiment for gold and for the outlook of gold, right? Clearly, that is very favorable right now. There's a lot of attention. Where do you think that is going to be heading over 2021 and beyond?
Yeah, it's a good question. And, of course, I'm a geologist. So, getting into macroeconomics and gold price forecasting are probably way outside my area of expertise. But, I think you can see that gold production globally is not going to keep increasing. In fact, it's going to start decreasing because, you look at the big gold producers, Barrick producing 5 million ounces a year. You cannot replace 5 million ounces a year. So you're going to start seeing reserves and resources decline. You're going to see grades dropping. And really, the juniors and the intermediates are just not, even though they may be growing slightly, it doesn't match up to the kind of production profile that you see out of these majors. And so, like with anything, once the supply starts to shrink, it generally tends to support prices. And I don't see anything even in the larger kind of economic, landscape that's going to, produce a big risk for gold. So I think we're quite comfortable looking forward at the kind of current prices we're seeing.
Tim, one other thing that I realized, which is impressive when I put my investor lens on, is your team's operational ability and ability to execute, right? We see a lot of this in our industry where teams say they're going to do something, but they don't. The market forgets, and then it's not that great. With you guys, you took a failing asset from 2016. It was going bankrupt, and you completely turn around over a pretty short period of time. And I don't think the market is giving your team enough credit for that. So talk to us a little bit about your team's ability to execute and how that's going to transition into the future of Fiore Gold.
Yeah, no, it's a real strength of the company, and the Pan mine is a good example. It had actually gone bankrupt, and it had taken quite a large company, Midway Gold, which had probably had a $300 or $400 million market cap, and bankrupted them very quickly. And a lot of people when it did that thought that the mine was a dog; it wasn't going to work. And in fact, when we bid on it at a bankruptcy, there were no other bidders. So, which is why I probably got $5 million. And we just kind of methodically set about looking at what are the problems, how do we address them, cost effectively. We don't try to rush things, but almost every problem we've run into, and I'll tell you, operating a mine, it's problems every day. And the public never hears about them. You just kind of deal with them internally, and our folks are really, really good at that. And they've looked at the problems and addressed them and solved them and moved on, and they stay calm. They don't panic when that happens. And it's been really effective. And, one of the key things is throughout all that, turning this bankrupt asset around, ramping it up, getting it cash flowing. They've never lost the focus on safety. We've never had a lost time injury ever. And that's almost unheard of in the mining industry. We've been the safest mine in Nevada for the last 5 years in a row. We've won the first place in the safety awards from the Nevada Mining Association. And to be able to do that really, I think, speaks to, it's just kind of an attention to detail. You focus on safety, you focus on the details, you don't take your eye off the ball, and that's how to make things work.
No, it is impressive. And to me, how I see this is it's really just the need to tell this more to the market and get that story out there, because there's so many positive things here in Fiore that I see. So are there any plans for marketing the story more? Like how are you going to get this across to investors? Because I feel like they don't, maybe it's such a simplistic story that people overlook it.
Yeah, it's interesting. We've in fact, we were just about to kick off quite a large U.S. marketing campaign because we think the story plays really well to U.S. investors. It's 100% U.S. domestic gold production, 100% U.S. exposure, very little political risk if you're an American investor. And we were just about to kick that off last February after the PDAC. So we've had to pivot a little bit, and we've all become experts at doing Zoom marketing and Teams calls and all the rest of the things. So yeah, I think we've tried to focus a fair bit on marketing. It'll be good when we can actually physically get back into the U.S. because I think a lot of U.S. investors like to meet management in person. And we're looking forward to that. But yeah, I think we've also looked at a U.S. listing as well. I think that's on our cards for this year. We just need to figure out what the timing is on it and how that's going to fit in with our overall plan.
Yeah, no, I'm glad you brought that up. Okay, Tim, well, we're basically at time here. I'm not sure if there's any final remarks you have for investors, but how I see it is, Fiore Gold listed on the Toronto Stock Exchange on the Venture under the ticker symbol F. A very great story, right? Producing, exploration, development potential, well cashed up in a great sound jurisdiction. Any final words or comments for our audience today?
Yeah, no, I think it's going to be an exciting year, an exciting couple of years for Fiore as we grow the company, and that's really our goal is to get bigger and be that go-to U.S. gold producer.
Perfect. Thanks for that, Tim. It was a pleasure talking to you.
Thank you.